Let's go and find out what our next guest is doing given the volatility we're seeing across markets. Is it time to pounce or panic? Angus Geddes from Fat Profits joining us on the program. Angus, good to go see you there. How are you playing the environment at the moment?
Good morning. Look, there is a lot of fear. There's a bit of bearish sentiment out there at the moment. I think it's a little bit overdone on that front, and we've actually been putting quite a bit of capital to work, in the last 2 or 3 weeks. So I've got perhaps a more bullish view looking out over the rest of the year.
So I know it's always painful to say buy the dip because sometimes it works and sometimes it doesn't. But if we end up with a clear resolution, there's going to be a long shopping list of some good quality names and sectors.
Look, there is, but I do think you've got to be quite selective in terms of what you buy. Obviously what we've seen with the Nasdaq, the unraveling with the technology sector and some of those growth stocks, they're not really front and center on my shopping list. I'm preferring more the value, cyclical, some of the defensives, and certainly some of those commodity thematics in our portfolio. So we've got quite a strong bias towards that end of the market.
Angus, I'm sure you're keeping a close eye on the Brent crude price last night. Came within a whisker of $100 a barrel. Is that a place to be invested at the moment?
Yeah, I'm quite bullish on oil for a number of reasons. Obviously any short-term resolution in the Ukraine, which is probably unlikely, could see the oil price come back. But I think the fundamentals are really there to carry the oil price a lot higher. So, we continue to be overweight the global energy sector in our portfolio. We own names such as Inpex, which is a large Japanese energy producer, but also some of the oil services companies, Halliburton, Schlumberger in the US.
And in terms of commodities more broadly, you still like the big Aussie names?
Look, I do. I just think they're very defensive. We've seen that iron ore price retrace nicely. China is stimulating their economy. They're not going to be changing their settings anytime soon. So, I think, the outlook for iron ore and all the commodities looks pretty bullish. And of course, let's not forget inflation. That's likely to remain elevated this year. That has to be good for commodities as well. You can't really go past, some of those big, robust cash flows and dividend yields of some of those large diversified miners, which have, haven't really been that volatile in the last few weeks.
Angus, you talked about inflation. What about the gold miners in particular? Because we know the local gold miners trading quite depressed valuations given relatively where we've actually got the spot pricing at the moment. Where does it go and screen when it comes to an investment at the moment?
Well, I think there's a buying opportunity definitely in the gold sector. If you take the Aussie miners, they're all making great cash flow at the moment with that Australian dollar gold price up around that 26.50 level. It's only a couple of $100 away from the all-time high, and valuations for a lot of those gold shares is quite low. And I think we've got a number of tailwinds now coming through for the gold price. Not least being rising geopolitical tensions, which is probably going to be a hallmark for this year. But we've also got inflation. And, I think what's interesting with gold, it's beginning to take, some of the leadership that we saw in the cryptocurrencies last year, some of that's really beginning to spill over to the gold price. So, yeah, and as, if you look at it technically, it's looking great. It's broken out of an 18-month consolidation. So, perhaps a little bit overbought near term, but I think, the primary trend there is up.
So as part of the last year's discussion, is that who wants gold when you could buy crypto? Are we seeing a switch the other way around?
Well, I think we are. And, cryptos are relatively new. Gold's been around for, thousands of years. It's always been a safe harbor during, rising geopolitical tensions, during wars, etc. So, look, I think there's a number of tailwind drivers there. And let's not also forget that it's quite underowned as an asset class at the moment. I think we saw a headlong rush into the cryptos over the last few years. Gold's quite underowned in a lot of investor portfolios. So, we could see that start to reverse, over the next few months.
Because we're really banging up against the clock, but I want to get your view on the banks at the moment. Everyone's talking about what's going on with the yield curve, big flattening taking place. Do you like the banks still?
Look, I really like the banks. I think valuations are pretty low generally for the global sector. I really quite like the Japanese banks. They have a very low price to book ratio, and I think this yield curve steepening at the long end. I think that's going to be a real theme for this year. I don't think we're done there. I think we're going to see much higher yields yet, on that 10-year. In fact, we're sort of targeting 2.75% on those US 10s by the end of the year. And, heaven forbid if we get a bit of inflation in Japan, a bit of that inflation sort of rubs off. I mean, that's got to be good for the Japanese economy after 4 decades of deflation. It's also got to be good for the Japanese yield curve. And I think we're going to see quite a steepening there this year, which has got to be good for those Japanese banks.